What's going on, everyone? It is Paul, the 920 Trader with 920 Trading and Trading Dakota. Today is Monday, July 8th, 2024, and this is how we trade a spot today. But before we get going, folks, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day and sometimes on the weekend. Also, don't forget to leave us a comment. We always appreciate that. And share with your friends, neighbors, and your trading community. So away we go, folks. So we had kind of a truncated week last week, or a broken up week. We had Monday, Tuesday trading, or Monday, Tuesday, Wednesday trading, Thursday, 4th of July. We came back for Friday trading. Then we had a couple of days off in between, punching all-time highs, folks. All-time highs all over the place. But let's get to, we're going to get to a pre-market high. We've got pre-market high sitting up here at 555.50. Pre-market low sitting at 553.75. Folks, we got $1.75. We got $1.75 is plenty. The three things that we're looking for number one, we're looking for volatility, we're looking for volume, and we are looking for range. Okay, so I've got a range. I've got $1.75 in pre-market, so that's a good range, okay? Number two, volatility. We're not going to know what that volatility is until, a couple of minutes into the day. What we'd like to see is about 18% volatility. That's a good number. When you get down to the 10, 11, 12, 13%, yes, contracts are really, really cheap, but you typically don't get the best moves when your volatility is that low. I mean, that's my experience. Now, sometimes you can get really, really good moves, but I'll tell you this, when price action starts to move and volatility is low, volatility will increase. It will follow the price. It will follow the price increase or the price action. So if you get a couple of candles that are really, really big candles, you'll see that implied volatility goes up. Now, the downside for taking one of those candles, a big candle with a lot of volume, is if you take it either mid-candle or at the end of the candle, volatility is going to be the highest. So you are much more likely to get stopped out of that play, even if the price action is going in your favor. Again, that's my recommendation to stay away from those 40, 50, 60 cent candles. If you missed the play, you missed a play. Oh, well. And again, folks, it's like a bus. You miss a bus, another one comes along right behind it. That is the true nature of trading. But again, folks, here we go. Away we go. Right out of the gate this morning, what do we have? We had decent volume. And again, you can see from these volume candles right over here. Right out of the gate, the 302,000. We're looking for something about double that, folks. We'd like to see something double, 5, 6, 7, 800,000. When we have super high volume like that, we know it's going to be a good day. Now, up until the last couple of months, it was not uncommon to trade over 1 million shares that first minute. It wasn't uncommon at all. But, lately, it just haven't had the volume. Now, because we are at all-time highs, it doesn't take as much to push the price up. Because, hey, let's face it, when we're at an all-time high, there's nobody there's nobody defending these positions against pushing it up. When you have something that has happened in the past, maybe some shorting activity at a specific level, there's incentive, generally speaking, to keep it below a specific level. But again, when we're up at all-time highs, there's number one, there's no historical context, and number two, there's nobody really holding it down. So again, if we're going to play this thing to the upside, we had that cross a good long time, 40 minutes before open. And you guys know me, I'm not going to take anything right at open. If I missed a play, which I miss these plays all the time. But again, my setup wasn't there. Now, back to the downside. I took this thing back to the downside. I had a really, really nice, almost a death cross in here. Now, again, back to the upside, took out this 556.09. These are going to be pivot points up here. Again, almost a death cross to the downside, stopped right at, I should have given it a couple more cents to close below that VWAP, but in my zeal, I said, let's go ahead and put on this trade and see what happens. Failing to make really higher highs over here, I thought we could get a little bit of push down, perhaps down to one of these levels down here. Now, I took the trade off the table. So again, right in here, I think this was right at 10 o'clock. So yeah, right at 10 o'clock. And we didn't really have any news that came out today, folks. Nothing really came out today and said, you know what, this or that or the other. So consequently, volume was low, volatility was low. But again, we did have that pre-market range, so we're not necessarily worried about it. Okay, so back to the downside here. In this trade for a long time, we're in this trade for 25 minutes, which it's a long time when the trade is just kind of jumping around, and then you get that last few minutes that you get really nice price action. The last few minutes kind of makes up for this 12, 15 minutes, however long this was. 18 minutes of just up and down and up and down and up and down. Now I will tell you this: if you're watching your P&L while you're in the middle of a trade, please don't do that. Please don't watch your P&L in the middle of a trade. I do one of two different things. Number one, it'll scare you out because it's going against you without hitting your stop. Or number two, when price action is going in your favor, it will take you out because you figure, well, you know what, I made my whatever percent, I'm okay with it. And the market, the chart didn't give you a reason for getting out. The market didn't say, this is a good place to get out. You get out because you're fearful. And most traders are fearful. Hope and fear destroys more traders, and fear destroys traders a lot more often than does hope. But again, back to the downside here. And at this point, I said, you know what? I'm hungry because I hadn't eaten breakfast and had a good workout this morning, so I was hungry. So I missed all of this action back to just kind of bouncing around. Now, on this trade right here at 11:33. So again, I closed out this trade right in here when we got this close above the 9. Could have given a little bit more grace, maybe up to this up to VWAP, but I said, you know what? I'm not even going to mess around with VWAP. And again, went to lunch, breakfast, whatever you want to call it. This trade right here, this was the third double cross. Okay, so we had a double cross right in here. So a double cross 11:26. We had a double cross a couple minutes later. Double cross at 11:31. And a double cross at 11:33. And I had people ask me, what about that trade made you get into the trade? Why didn't you take it here? Why didn't you take it here? And the proof is, you can look at this candle right here, folks. You can look at how fat this candle is. So we have a thin candle here. You have another relatively thin candle here. So we have relatively low volume. Then on this candle, volume really starts to kick up. So generally speaking, every price action or big move starts with volume. You've got to have a little volume behind the move, folks. So again, I saw this fat stick right here, and I said, okay, this is third double cross to the downside, folks. It looks like we're going to get that cross that we're looking for. Close this candle right here. Was trying to ride it down. Now, you're asking probably why I stayed in once we got through this or past this pivot point. Well, I kind of thought we were going to keep on pushing down, and we did after we pulled back. And again, I missed this play in here. I don't remember what I was doing. Got a lot of people in the group, so I'm talking to people and responding to instant messages. But again, what caused me to get into this play right here was the fact that it's double crossed to the downside and then otherwise downtrending, failed to get over the VWAP. And again, volume. So we had that volume, pushed it back to the downside. And again, I just missed this in here, folks. I missed it. So I decided to take this play back to the downside over here. And I stopped out of this play right here. Now, the downside to stopping out of this trade right here, in here. And again, we had, I think, about 3 hours left in the trading day so far at this point. The downside is that I was kind of collecting my thoughts. It wasn't a bad loss, not any kind of big deal at all. And missed this play to the upside. I called it out. I mean, I said, folks, if this happens and this is what I expect to happen, we got a really super nice play. Back up to VWAP, folks. Really super nice play up to VWAP. Just kind of bounced around here a couple of different times, off of VWAP, rejected off of VWAP, rejected off of VWAP, double cross to the downside. Again, this would have been a really nice play in here. Folks, we're late in the day at this point, a couple hours left in the trading day, and I said to myself, wait till, the end of day, see if you can catch something end of day. So I kind of did. I waited until we had the 350 candle. So 350 candle, 3 out of 5 days, you're going to get a really super nice play on the 350 candle. Sometimes it's 355, which is going to be right in here. But again, 350. And why did I take this trade? Well, number one, I had volume. So we had 386,000. One of the largest candles of the day up to that point. I think that was the largest volume candle up to that point. right in here. And it pushed up, pushed up, pushed up. And at 355, we got a really, really nice candle with a wick up. So I was able to market out of this trade for a really, really super, super nice, nice play. And I think we're only talking a little over 50 cents in SPY movement. But when you're trading multiple SPX, particularly late in the day, you can get those SPX contracts inexpensive. Now, that doesn't mean for you to start trading SPX. If you're trading a small position size, small SPY position size, please don't move up to SPX just because the contracts are cheap late in the day. Keep on doing what you're doing. Keep on going through that specific progression. If your specific progression says I only need to be trading 2 SPY or 3 SPY or whatever that number is, trade that position size. And again, do not move up until you have passed all of your tests to move up to that next position size. But anyway, that's how she played out today. Overall, it was a decent day. I think price action, if we look at it from the whole, was decent today. There were some nice plays, made some plays, missed some plays. Again, I think today was a decent day. It wasn't anything great. We do have some things coming out later this week, and those things later this week. And again, today we really didn't have anything to speak of. Tomorrow morning, Powell, so Jay Powell, he is speaking before the Senate Banking Committee. So he's doing that. Other than that, we really don't have anything. Now, on Wednesday, Powell is going to be speaking again at 10 o'clock. So he's going to be speaking in front of the House. So we've got the Senate tomorrow and we've got the House on Wednesday. We have a 10-year bond auction tomorrow also. Now, Thursday of this week is my favorite day of the month. It is CPI. So I love CPI day. Now, if you remember back to last month, we had both CPI and FOMC, and it only happened actually 3 times now in the last 5 years. I don't like those things together. But again, it doesn't matter what I like, folks. It matters what the economic calendar is. They forgot to call me again this year. But anyway, that's how she played out today. Now, if you like our videos, please go ahead and give us a like and a subscribe. Don't forget to turn on your notifications. That way you can be notified when we drop new content, which is just about every day and sometimes on the weekends. Also, leave us a comment. We love comments, and share with your friends, maybe your neighbors and your trading community, folks. Help spread the good word of the 920. If you are interested in live daily trading, folks, folks, this is where the rubber meets the road. You can get the strategy for nothing at no cost to you other than your time. But if you're interested in live daily trading, where we go over literally every single one of these setups, whether I'm in the trade or not, we're talking about these setups, folks. If you're interested in learning to trade the 920, head on over to Trading Decoded. Again, head on over to Trading Decoded. The link for that is down below, folks. Head on over there. We're going to give you that first week for free if you enjoy it, if it is for you, if you find value in it, which you know what? You're going to find value in it. If you find value in it, stick around. I think you will like what you see. Now, if you're interested in learning about the 920 crossover strategy, head on over to 920trading.com. All of the information about the 920 strategy is there, folks. You don't need to spend thousands of dollars on some super secret strategy that is neither super nor secret. Everything is already there, folks. Anything that, if anybody's saying there's something new out there, it's not. It's just repackaged garbage from something that either worked or didn't work that's already been out there for a long time. So don't trust the people that say, oh, this is new. No, it's not. They're just not being honest with you. But again, that's how we did it today, folks. We appreciate everybody. We appreciate you spending a little bit of time with us. We hope everybody had a good day today. Again, folks, we're going to come back and we're going to do this thing tomorrow. But again, I hope everybody has a great rest of the day. And again, thanks for spending some time with us. And we will see you in the markets.